The Asian session is upon us, and I'm buying a little bit more into Asia because I detect that we are going to tip into the northern front, and I'm going to risk half the account margin again, but I am going to get out. And I started to downsize the entries. So I'm running two sizes. Got this big bruiser size. And I'm scalping to here. So here's my exits. The 20 EMA has perfectly called this entry. The only problem being, how big did you get in there? And did you get in here because this is the argument from Confluence. This is also an auction on closing prices on the 4-hour. What else we have? We have a double top becomes a bottom on Wix. A good enough on close to pull the trigger here for me to add. So I'm adding kind of late, but we have tipped the window. We have taken out the closing prices. We've closed above it. If you're a confirmation guy, you, breakout confirmation. I don't know if you can see the wick, but I should go to the other chart and just switch time frame. So this is my entry chart, and this is my exit chart. That's my only take profits I got built. And I think I did put some way up there because I couldn't get rid of that. So I put it up 100 pips. So there actually is an exit way up there on this account. So the thing about this account is, since there's no stops, there's only take profits. And I've only taken profits. Once I got out of the red area, so the account was probably at $9,000 for a little bit or something. And I just stepped in and reloaded it. I mean, just bought into it. So from $10,000, I think I went down to, I don't know, maybe a $700 drop. And now this would be the second week. And I suppose at this point, it looks like a foregone conclusion that the euro dollar is going up. Well, it would foregone conclusion for anybody that bought this 4-hour pullback viciously for a high probability structured trade on closing prices and not touching the EMA unless you consider this entry, which a lot of people would, and you could. If you claim the wick that you babysat that, is this poked into the 20 EMA and you pull the trigger? Yes. I would say that is the ultimate entry. According to Alexander Elder, you're going to put your buy stop here or some bullshit, and he's doing a 13 EMA to be all Fibonacci about it, which should just be a tighter one up here. He probably got this entry, this one, but the problem is it would start to get all loopy. But you could also be the goober that put a fucking buy stop here, sell stop here, and you're telling me, dude, I'm up on the trade and letting my profits run, and you'd probably be fucking right, especially right here and now. Anita Baker, here and now. Oh no, that's the Luther Vandross guy. So, who's no longer with us? Thanks, Jesse. To blame all the, we should do a hate crime against all the black high-end singers that died. This is the hole to fit. We've wicked into it, so. But these closing patterns. Look at this unique confluence on closing prices, and then we get you could just call this a head to shoulder. Look how unique this triangle is compared to any other triangle on here. I'd also call this a triangle. Obviously, it's or a flag, whatever, one man's trapezoid's another man's pentagon, and on and on. You could fill this up and make it some wackadoodle thing. But yeah, what's going to happen up here? Now looking back, of course, I said on the monthly, even though you could have made you could have made so much money if you just rode this for 4 hours and dumped it. The thing that's a little disturbing about the market, to be honest with you, is you're trapped below this kind of diagonal structure for 4 hours down. You know, it was either 5 a.m., 5 p.m., 1 a.m., 1 p.m., or it was 9 a.m. or 9 p.m. There's only 6 price pulses per day. I guess 5 if you're going to consider. But what the fuck is going on? Look at this fucking move. Regardless of what it did, we know it did that. And even Williams would agree with that. Anything else it's done, it's guaranteed when it gets to here, it's engulfed at least this. If you consider this to be an engulf pattern, and then it re-engulfs, it's almost engulfs its whole ass all the way back to here, and you end up with a dare I say, what is that? 12-hour inverted hammer, really. And on some other platform, it may be, or you could say, well, shit, from here to here is the wick, and this is a daily hammer. So I'm sure if you switch time frames, you can see how difficult it is to think about multiple time frames all at once. It's a real brain teaser, because you're thinking, well, wait a minute. It's like rivers. You go outside your house and you got 5 rivers, and each river has a river inside the river. If you're going to go trade 12 currency pairs, and you'd be like, okay. Plus, you got to do the math on the actual cost of it. And if you're really trying to just relax and always know what time it is, you would just trade one currency pair. You know, you could just pick one. But if you got your eye on the dollar index, this is kind of like, I guess, having the x-rays to your girlfriend. Maybe you don't want to know what she looks like structurally, right? You're like, she looks good here. Don't, in fact, keep your clothes on. We don't know. I don't want to be surprised. So, how does it bother you to be in a big position? Of course, now, psychologically, people would say, well, sure, anybody could take a $10,000 account and make it to $83,000. I've not got out of this trade. I've been in here all weekend. I've only added on just recently, and I added this last night, and I scalped out. So I had scalps last night that were right up in the pocket of the daily chart. So this was my exit last night. Was, if you look at the 4-hour chart, so I won't torture you with those wicks. These big bars are the cure. So my exit was here, and I got filled. And of course, we came off this top here. It's a very tight window. So you could also sold up here on the very top of rooftops. And it's so, you can't even see this shit. It's like the platform. You have to fix the scale and stretch that out. And you're looking at a window that just looks incredibly, of course, you can't really be looking at this chart when the price gets up there if you're a kind of person that trades at the market, because you just be saying, what the fuck is going on? Like, if I get a millisecond to nail that trade, how much time do you think it spent up there? On the 4-hour chart, really, how much time do you think you had to nail this trade? The question would be, the quiz would be, is there a triple top on the 1 minute in there, or is that going to be a double top on the 7-minute chart? What's living inside? I always fascinated. What is living in the tip of this wick? And that's the story. That's that. And look at this window. So this would be the I call the wick window the closing prices to the edge of the range. So to me, that is the critical thing. What is that number? So we know it closed here. Any kind of retap of this area with a sell order would make total sense. Of course, it wouldn't if you were looking at the moving averages, right? We just can't even imagine that. So this is the window. This closing price to whatever that wick was. And obviously you went higher than that. So logic being, if you sell high, buy low, you're kind of forced to sell up here, even though it's really, really awkward. But look how hard this comes back off that top. It's really hard to believe how ridiculous the price action is as the clock's ticking by. And of course, here's your classic kind of a trap. When it comes off this top here, there's this kind of issue where, sure, a buy stop bot would have got filled there and been up on the trade, moved the stop up a little bit, and only lost this much. Imagine you were forced to trade the same size on every ticket. It would be a lot less risky to trade these small bars, you know. And maybe the robot could make this trade for you. Or this is a triangle of some magnitude. We have 12 hours of nothing, then boom, and it cleans a little vacuum, and hopefully people are cashing out. But of course, there's people cashing in to go the other way there. We're always going to see that. Clip the trees, come back. And of course, the closing story is a completely different story. So that's the literal kind of price over time that people call a trend. Everybody's calling that the trend, right? As it zigzags along, it's mostly zigging up, and it's making the 20 EMA go up. And at this rate of change here now, the no-nonsense Forex guy, what he's trying to do is kind of curve fit, like, well, you know what, when the robot, it's like alligator bullshit from Williams Alligator. What a dumb fucking idea. I mean, dude, the question is, in a market that moves this brutally erratic, where it's like, okay, it fills that vacuum, ain't nobody going to be able to push that. Nobody wants it, or it's satisfied. Cause and effect. It's satisfied because of that little micro void. Then come ripping all the way back down here in the basement. It's satisfied. It's just always trying to stabilize the last drama point. And when the thing goes into low drama mode, that's even scarier, because we've been going sideways for almost 2 fucking weeks. And this little drift up here, of course, notice the breakout bot nailed that trade. Wow, moved to stop to break even. Only made this much money, but hey, didn't take a loss. Look at that. What a good trader. But the account is a stop here. Now, the psychologically difficult part of this account is, imagine you put 10 grand in an account. Like if I had said to somebody, how would you feel about risking $10,000 to make $100,000 in 1 month? They'd say, well, that sounds like going to Vegas. Actually, I think you could probably do that in Vegas if you knew how to count cards a little bit. I'm sure you could hang in there and wait for the best hands to show up and only trade when it's the best conditions. But now, could you replicate this every month? What would you do next month? Start off with 10 grand again and do it again? Or actually do it with 10 grand, but don't trade it so hard. So it takes you quite a bit of time to lose the money, and you don't feel so bad because you've already made 100 grand. Or do you feel like 10 grand in the account is like owning a new car and you don't want to ruin it, so you just don't trade it that hard? You kind of, once you're about, you cut your losses short. Every time you're down $80, you get out, and you're like kind of shy about it. I suppose to put $1,000 in an account, which in the same situation, we'd be at $8,000 right now. And for some people, they'd say, well, that's pretty fucking good. I think just get the fuck out. Or they would say, fuck, I'm going to add to the account. I'm going to put $1,000 in there. I'm fucking good at this. There's no telling what's going to happen. you can make a tremendous amount of money and just still be an asshole. It's not gonna. I mean, whatever you are, what you are. So whatever you go into it as, of course, you can use it to your ability. Of course, if you're not the kind of person that, like, I guess the thing would be, and of course, I know this is gonna sound dumb, but people ask this question when you fill out these forms. They say, "Well, why do you want to be a trader?" Most people would say, "Are you kidding me? To make money." But so what? You make money, then what? I mean, it's so easy to make money in these markets if you don't care about losing. If you don't care about losing, but it's so funny. People just hold on to it so hard, like it's a new car. And would you feel bad if you took the account from 10 grand to $1 million and blew it up? Some people would say, I lost 10 grand. Now, what if you had 5 accounts and in one of those accounts, no, you kind of have to look at them like having children, I think. Would you want to have 5 kids? Most people wouldn't. But if you had 5 trading accounts and one of them became like, like, God, I don't know, it's something about, you may be surprised that the other trading account is on a different device and it has better, like on the tablet, it's a different world because you just double click stuff and you can just be done. Where the desktop's a big chore, you got to get up and is it on? It's like, there's a big drama running the, and I'm running this 200, trying to get the biggest graphics I can out of MT4 because it's such a piece of shit. It doesn't want to see Windows 8. I mean, the wicks are so skinny that if I went to full res on this thing, it would just, you couldn't tolerate it. So I just noticed that it's the feeling about the money in the account is a problem, because especially if you've lost a lot of money, right? Because as soon as you can make so much back, that's the other problem. You would definitely say, oh my God, that was just so terrifying. But this is the problem, is you're trying to make something. It's kind of like if you were to say that instead of learning how to play guitar, you were just going to go out and just live like a rock star without having to get the income, right? So something is just not right about making money, especially if you really are just, I don't know how that would be, honestly. I guess if you could afford to lose $500 a month, you'd have to figure out how much you could afford to lose, because it's going to cost you something, at least time. Some people would say, well, I'm not going to waste my time trading a demo account or even a real account, because what's the point? It's rigged. Well, some people come to trading, I think, because it's an adventure, And of course, people are, it's kind of like you're kind of financial rock star, I guess, is the idea. But, we all know what's going on in these markets. It's just like, I suppose, if you, it comes just down to being afraid, I suppose. Because you have to trust your gut, I think. I know there's the cloud trading and all that stuff, and people have this rule list, but I just don't think anybody goes out looking for a piece of ass for another person to have sex with, and they're thinking, well, let me see here. We used to do it as kids. We had like these numbers. The girl had to have a certain number range. But I think, it's always going to be some kind of intangible kind of gut feeling. I don't think people have a checklist when they're out looking. I think they do have a checklist, but of course they throw that out the window, like you always have to, because it just doesn't feel right. All the books I've read just feel like I have this book by Joe Ross. So now this book costs $150. $150 now. This is back, I mean, in today's dollars, it's like $300 for a book. Not even color pictures in it. And okay, it's like 134 pages. And he had 3 books. I bought all 3 of them. It's $450 for these books. One of them is called Trading's a Business, and one of them is called Trading the 5-Minute Chart, I think. Or no, it's called Minute by Minute, the market minute by minute. Now, I guess I could look at these books now and say, look, I can see a trade plan in here, but at the time, it was like somebody just saying, here's flour, here's eggs, and here's butter. But I have no idea how to compose even when I read cookbooks when I was a kid, I just thought, there's no way. I got to see you do it first. If I see you do it, then I can do it, but I'm just a show and tell guy. Like if you wrote it, directions to your place, I would have to draw a map before I left the house. You just couldn't give me directions. I know the girls are like, here's directions. Go down Main Street, turn left. I'm like, that's not going to work for me. I'm going to get lost in a second because I'm going to look at that phrase and I'm going to think about it so hard. And I'm thinking, why do they call it Main Street? Spelling right on that? Now, if you show me a map, that's why it's a pattern. Pattern recognition is the easiest thing in the world. And we all know what current pattern the market's in. But I think it comes down to the confirmation traders versus the non-confirmation traders. But the big, they're the same depending on how you size the position, because even the confirmation guy has to admit that he is better to buy or sell at the market right now, almost regardless of what time of day it is, knowing that, or, to just get into something. I suppose you shouldn't be afraid to just get into something and see what happens, because what's going to happen is if you get in the wrong direction accidentally because you sold and you wanted to buy, that's kind of the funniest thing that could happen, because then you immediately think, fuck, I'm making money on this. I didn't want to buy. I accidentally sold, but I'm up. Now what? Should I get out? And so when I'm thinking, yeah, for me, I'm going the wrong direction. But oddly enough, I'm up on the trade. So right off the bat, I'm up on the trade. I really shouldn't be, because I chose the wrong direction. So if I sold right now, which I can't even imagine selling now, and I accidentally sold, it's down. It's really hard to be in a trade that's making money when you're wrong. So this is the other question you'd have to ask somebody. How do you feel about being wrong and making money? They'd say, wait just a minute. So, you would, like Mark Douglas says, you wouldn't enter the trade unless you knew you're right. But that also presupposes you picked the direction. But what if you got in the trade knowing you're right, but you pulled the wrong trigger? You pulled the wrong key on the keyboard. So that could be disturbing too. So you got to think of all this stuff, and going against yourself on the trade, you could go into the market and play that game on a demo too. And people have said that, I every trade I get into, but I think you're distorting it, because not every trade to get into is going to be wrong. But it feels like that because, oh shit, I'm on the wrong side of this market. And of course, I got this one guy who always asks me, well, it's going up. Like, say I was selling the euro right now, and I have sell limits above here. I'm sure it's going to back off at some point, but there's a big hole for me right now. So it's very scary from the standpoint of I like very afraid to sell up into that. Of course, you would have been afraid to sell up into it back here, right? But if you figured out how much that was going to be, and I did sell on last week's price pulse up here, I had some sells, but then when it came back down, I scalped out of those and just added to longs in here. And then I had not sells, but I had take profits last night here. And then I bought here. And I put more limits in there of various sizes. Everything showing here is currently the entrance price, long only. So there's no pending sell limits now. And this is only Monday. We've got last week's high is just ominously sitting above us just by a few pips. And what could possibly go wrong for the bears? Oh my God. So I'm a bull, so I'm bullish really on anything. Only because I could see this. To me, this is a winning trade. Just going long only, right? I don't have to sell there. I know the sellers are coming in there. I don't have to sell there. Because even if you're short, you got to think about when you're going to take profits, and people are going to profit here. Everybody... I guess this is the problem with people having signal services, because by the time a guy has a signal to go long here, he misses the signal here. 4 hours later, he gets an email. Then he goes long, and then he gets just crushed. I mean, I don't even know how people are. I gave a signal service. You just have to have a PAM account or a copy account. And you could do this also with a PAM account, put $1,000 in there. You should be able to. You know, I literally don't have any stops in here. Somebody said that I was doing the way that this Forex Hangout guy's trading. Not really, because he's actually getting out of trades. I'm not. I'll trade this in one direction, in the long direction for the next week. 2 weeks, 3 weeks. I could dump the whole thing, go flat, which I've done twice, come back in with limits, and that's it. And actually, if the account gets to $200,000 by the end of the month, then I would just say, okay, let's retire the account. Now come back with like $5,000 in 2 other accounts. I mean, how much do I got to trade? How much would you risk? Would you risk $100 to make $400? Now, you would think you could do that. And of course, at some point, you have to figure the math. You need leverage, because if you're down to that amount of money. So here, I still needed leverage. I used half of the leverage into the weekend. I was at half, and I was at 58,000 balance. So I could go flat right here into Asia, but it doesn't make any sense, because we're just going to keep drifting up here. All I can think of is I am going to get out of these tickets here, though. See, okay. Now I'm going to make 5 pips here. This is going to be a scalp to just pad the account. Try to get the account to 70,000. And I'm going to buy, I got this set to 92. So I could set this to a round standard lot. Of course, I'm kind of afraid to do that because the bankers are going to see that I'm trading standard lots. Just like people in the stock market would buy odd lots. And the claim is that the floor traders were all aware of this odd lot shit, and they'd come after your odd lot. Just crazy shit. Paranoid. People have had these paranoid, delusional stories about the market for how long now? I'm going to try to make 7 pips here. Probably about 6.5 pips after the spread here and commissions. So We're going to ride this puppy into the dawn of Montana. Top of the hour is coming in 12 minutes, and we are crushing north. All aboard, people. Even the 20 EMAs turned up. I told you that fucking shit worked. Jed, honey, he's using the 20 EMA again. I think he's going to blow up the account. Yeah, I know. I went, look at this 20 EMA bullshit. Can you believe this stuff, man? Get a load of this 20 EMA. I'm using it with a filter of 2-period RSI. It's not bad. I don't know. That's 20 EMA. Let's put it on the 4-hour chart. Looks okay. It's useless. That's another thing. If you are going to use moving averages, if you really insist upon it, on the daily, I would pick a 5-period moving average. That's another thing with the to really not have to switch time frames. You know, this is essentially the 3-day moving average. 20. It's like a 3-day moving average here. This 20 on a 4-hour chart. Yeah, here's like a monthly. But yeah, the 1-hour chart's a little whipsaw, so I'd go for a 40-period moving average. So here we're coming into Asia. Gonna pop the cork here. Those are my targets. I got some just get out of here targets, and they're actually inside the wicks there. It looks like it's getting all excited here. I got 10 minutes before the top of the hour. If there's any news coming out, I have to check the news situation here. I don't know what we got. Probably something out of Australia. Let's see. Forex Factory. Let's check the factory here. What do we got? Oh gosh. 5 a.m. that guy, I guess the British pound must have got all whacked out. I didn't see it. But, and there was that Fed stuff after the market closed. Another boring day, nothing here. Was it a holiday over there? The pound went berserk. Doesn't it always, though? So, but this is different than robotic trading, this manual trading here, because I'm literally looking at this thing and going, oh yeah, just load the wagon. Absolutely risk the whole 10 grand. Do not pass go. Do not collect $200. So I'm using 30, and I'll be getting out of some of these tickets right away. So if we do smack up to here, I'd probably go flat if we get to this take profit here. Another 100 pips to this line. I'd be certainly tempted to go flat here. If we make it to 150 grand by here, I would just get out. That should be quite a climax moment there. That is the biggest down bar on there. I mean, that's a catastrophic move. 1 day of punishment. In fact, if you were a trend trader, you got the 20 EMA turns over about right there. So like I said, this would be, I would set this to 5 or 4 period if I'm in the daily. I have to adjust all these moving averages to make sense with the current. I'd also probably make it a simple moving average. I'll leave that exponential stuff for the people that big fancy. Just to keep a simple tradition, we'll make it like orange. So we got the classic tight moving average. So you got a nice, beautiful entry here on the daily. This is kind of a nice, beautiful entry there, and that's it. Of course, this last one, you're getting crushed. But this is like cloud trading. This is a simple trading system. You know, here you make money here, but you notice you get burned. It takes this beautiful setup into the 4 period, and then if you don't get out, you're screwed. Plus, you get burned here when you buy, and you get burned here when you buy. So you could always cherry pick that. I would say that is the enter at the moving average technique, or you could say anything where this is pointed down, that's confirmed downtrend. And of course, you're getting in late. You kind of just have to chase it here, because the only place you're supposed to sell it is in a classic trend system. You buy pullbacks into the trend. But the okay to pull the trigger on the 4-hour chart, there's got to be a rally on the 4-hour chart into this for you to really make money on a moving average. You need to be able to sell this. That has to be. That's why I say the 3-period moving average might be better than the 5. I think I got. What did I put in here? See, to me, I just go with the fucking price. It's just, it's tight as, look, 5 is too laggy. 4 is about as laggy as you can go. There. That's like Akinashi there. It's pointing up, you buy. It's pointing down, you sell. So at least you're not too late to the party. You know, you want to be the... I think the 3-period probably is. That's why I'm using 3-period RSI. I like stuff that fits tight. I don't want to have to wait for... you know, these are... well, the rule system of that. But you're so late to the thing. You got to be aware of this issue. To me, this matters more than this dumbass 4-period trend. It means too much. This void here filling is the cause for this move. So would you rather see the cause and effect, or do you like to see, well, it's pure effect. Pure effect on the moving averages. The cause is the void. Right, we're filling this void, now we're drifting up. Daily chart. Could we come up or here and retest this at some point? Maybe. Could we fall back into this void? Because the more we drift up, the more we're going to create another void. So if you just take this and fill it in by hand, you'll notice, oh gosh, it's just so simple. You can take the noise out of it here. Certainly if you had a indicator which just running like a rainbow moving, like every moving average up to 5, every different style. And people would say, oh, I like this. It's like Renko. Obviously, you sell here. Well, yeah, but don't forget, inside this now, you've created this huge volatility window, and you've got to be able to survive the equity punishment here. Here we're going up now, so I'm going to scalp out of this. I'm not gonna try to blow out the account. So we'll get to about 100 grand here. I will be very tempted to. If it goes to 200 grand tonight, I don't even know what it would go to if we got to here, because I didn't do the math. But if we could fill this to here, I don't need to see this price. And then I could just come back in with really close to the market. Now, this is what I did earlier was, if that's the case, if I'm literally going to dump the whole account, go flat, if it gets to 150 grand, well, you know, this is, if it gets to here, I could get out of the whole thing, and what I would do is just come in with limits like this. Now, it wouldn't even compare to the exposure I have now, and walk away. And any kind of pullback into here, in other words, nothing's going to go in a straight line. Of course, this is almost literally a straight line. There is some flags inside of that. This is not a straight line. Coming back up off of this thing is not smooth at all. Another big problem is the markets just don't have, in other words, this may be the last time you'll see 7 days down at that rate of change. And of course, this is a very profound move. So is that. But then this drift up. Now it could make up for lost time here, but if that's the case, it's going to cause another vacuum here, and we can expect to see wick raids. So, it could get all crazy, you know. All you have to do is have. Now, I don't think say some news came out of North Korea where Trump was, I don't know, he died on a piece of sushi or something. He choked on sushi, and it could create volatility, and the market would just fill these voids. But maybe it's going to fill those voids anyway, but it's just going to do it faster. Like, how quickly will this, if this is a drip down fill of this void, it could also be just a vicious move, because regardless of what, not everybody's babysitting the market. Everybody knows there's tickets down here of some order, right? That's picking up that, and that's why you got this reaction. So this is the cause. It gets trapped here. It tries to engulf. It only makes it back to that doji, and then one more plummet, and now drift up. And of course, this is the time to really have said, well, you know, as far as waiting goes, that was last month. You had to wait. Like, another thing you'd ask somebody, would you wait 10 days to, you got plenty of time to get all the 10 grand, take out some loans, load the wagon. And of course, here, a lot of people would want to get the hell out, I think, of the whole trade. Especially if you overloaded this entry here, and when it came back down here, you didn't have enough margin or money. And you only need a couple of these trades, actually, if you are the person that's a risk taker. You wouldn't even, now it may be, you may feel bad about losing money, but look at this beautiful top bottom here. But it's just a feeling. It's not, it's just, and of course, you know, you had the same feeling if you decided to paint your walls and end up stuck to them. Something went terribly wrong, or you painted and spilled paint all over your dog or something. So, you know, something that can go wrong. Look at this. Now, this could be a possible entry here. But this is a classic, you know, it's dripping down, and then such a vicious move through that, fills it, comes back to another void being filled. Now the classic drift. Trying to heal it. This is going to be the biggest contention, but I definitely would go flat here, reload on limits. That way I don't have to, maybe I do lose 10 grand, or I'm at $10,000 drawdown when it comes back into those limits, but at least I'll be at 130 grand. And I can always call it quits. You have to get those first scalps in, and get something going to, so you trade slightly bigger. Of course, here I'm being really radical because I'm just risking it all. That also goes along with thinking that with what I'm looking at here is money that I have. It's really not, unless I actually withdraw it out of the broker also. So even if I were to go flat, it doesn't mean I couldn't come in and just destroy the account on some other currency pair, thinking, oh, I'll just do the same thing here, not realizing that it's got twice the volatility of the euro dollar. And it's very vicious as far as the noise factor that people are talking about. I mean, just the fluctuations and the spread going just insanely wide. If you're going to hold this trade like I did over the weekend, if you try that in the, they might take you out as, if you run out of margin real quick coming into the opening on Sunday on some wacky pair on high leverage broker and whatever. So here I'll be scalping out of these guys pretty soon, and we're just going to ride this puppy into the night. Like I said, target will be an equity target. If we get to here, I'm hoping I can go flat there. I'll have a nice chunk of money to go flat. And then I'll just hand place limits down here. Of course, these are big tickets, so it doesn't bother me. And for this dollar amount, for a lot of people, this is a lot of money. I could just as easily do what I did to the other account, is take it up to about, of course, now that one I did on 1K scripts. It's quite a bit of work. Actually, a couple of those accounts, I intervened on top of it and traded 2 standard lots per ticket because I could see it was obvious where the market was going. And those had no stops, actually. So, but, the only difference with stops is that means that you just have a set risk, where if you know that you only deposited $800, that's all you're really risking. That is your stop. I think I just got taken out of a scalp here. So we're popping into Asia here. It's 5 minutes after the top of the hour, and we're off to the races. So let's see here. I'm almost out of all my early take profits, and we're at 90 grand. So I'm expecting way more rally tonight into the storm, into the vacuum above, coming all the way back off the floor here. A daily chart looks much better on this chart. I don't like that chart. Here we are. The sellers just came in there right at the top of the hour. So luckily we cashed out on something right there in that last little pop, because it's getting very contentious here. We've been going sideways for too long. Look at the daily chart, about to tip into the void. And, of course, for the people that are really bullish, me included, that's nothing I'm debating, just sitting on this trade and wait until it makes like 300 grand or something. Because it certainly, if I was to never get out of this trade and just risk the whole 10 grand, like never take any, just buy in pullbacks. If you could take out this 116, wow. But everybody's going to sell there. I'd say most people are going. This is the biggest sell window in the world coming up, if you make it up here. If we can make it up there. And the next one for certain, it's going to be the this 50 pip window between those 2 days back there. That's going to be kind of horror. That's going to be the big kahuna. And we're about to take out. Yeah, we're about to take out Friday's high here. Or I'm sorry, Monday's high. We took out Friday's high last night. Yeah, just come drifting back up. So let's try to scalp out of that. And let this guy go all the way back up to this 20 EMA. The 4 is climbing into it. I could go for the 420 crossover. People have all sorts of silly stuff, but it's the MACD is trying to pick up, the histogram is trying to pick up the convergence between the 4 and the 20 period. In other words, people figured out, well, you could do the same thing here and just figure out what is the difference if you run your MACD super tight at 1, then it's this area here. All right, so the histogram is going to show you the distance from closing prices to this moving average, and you'll see the histogram show up on the bottom of your screen. Is the only difference. It's like, how much void is there between that? And of course, you're below the zero line is on MACD. So you're not going to see MACD try to get to that zero line and just keep falling away. But the divergence is the fact that this is now smaller than this triple bottom, and MACD has to have divergence here. Price is lower, MACD's got to be coming up off the floor there. RSI is. RSI is definitely coming up off the floor. This is the lowest RSI is right here at the point 2 because my graphics won't paint it there. There compared to there. And that's it. We're going to ride this puppy out and just try to crush the account as hard as you can with $10,000. Total risk of ruin is 10 grand.